Welcome traders to another Tickmill earnings report preview with me, Patrick Munnelly. Before we jump into today's report, it's important as always that we adhere to the risk disclaimer. The material provided is for information purposes only and should not be considered as investment advice. The views, information or opinions expressed in this recording are solely mine. They're not indicative or representative of those held by Tickmill UK or Tickmill Europe Limited. It's equally important that we understand that CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% and 65% of retail investor accounts lose money when trading CFDs with Tickmill UK or Tickmill Europe Limited. Okay, let's jump into today's report. Today we're going to be looking at Coca-Cola, which released earnings Monday before the bell in New York. We're looking for an earnings per share of 58 cents on revenue of 9.82 billion. There is a whisper number out there suggesting that the company could print a 61 cents per share earnings. In terms of what to look for in the report, Coca-Cola's results in recent quarters have been benefiting from strategic transformation and ongoing recovery around the world. The company's top line has been improving owing to strength across the majority of the markets. Investments in the marketplace and cycling of last year's pandemic-led impacts, which have been aiding volumes. Revenues are also expected to have gained from improved price mix, driven by pricing actions in the marketplace, coupled with a favourable channel and package mix due to the lapping of last year's pandemic-led disruptions. Continued volume gains in the trademark Coca-Cola sparkling flavours, the nutrition, juice, dairy and plant-based beverages and hydration, sports, coffee and tea categories are expected to get reflected in the company's first quarter results. Additionally, Coca-Cola's first quarter results are likely to reflect ongoing gains from innovations and accelerating digital investments. The company has been witnessing a surge in e-commerce, with the growth rate of the channel doubling in many countries. It's been accelerating investments to build strong digital capabilities. The company has been consistently strengthening consumer connections and further piloting various digital-enabled innovations through fulfillment methods to capture the online demand, which are likely to have boosted first quarter sales. Coca-Cola, however, has been witnessing pressures from supply chain costs, including higher commodity input costs and transformation expenses. It has also been seeing pressures related to commodity and material cost inflation. Pressures from input cost inflation and other costs are likely to have hurt the performance in the first quarter. Coca-Cola has been investing in markets and brands to support sales growth with higher spending on consumer-facing activities. This has led to higher marketing investments in the past few quarters. Higher marketing spending and increase in short-term incentives and stock-based compensation are expected to have led to an increased selling, general and administrative expenses in the first quarter. Moving on now to think about the quantitative stock trading patterns around the earning releases. Stock has moved higher in the immediate aftermath of earnings. 10 of the last 12 previous reports. On average, the stock has gained 1.5% in the first day after the trading. And in general, we see about an average 1.5% gain for the stock post-earnings. Shares have moved higher in the immediate aftermath. 12 out of the last 12 previous occasions, on average, stock has, if we do gap higher, the average gap to the upside is about 1.6% into that first day after earnings. What can we expect in terms of volatility? Well, the options market is pricing in about a 3.3% move on earnings. The stock has averaged a 2% move in recent quarters. And then in terms of where we are from a flow perspective and sentiment, Monday, April 4th, there was some notable buying, specifically 10,347 contracts of the $62.50 put expiring Friday, May 20th. Option order flow sentiment has generally been on the bearish side. However, investor sentiment going into the company's earnings release has a 65% of investors expecting earnings beat. Overall, earnings estimates have been revised higher since the company's last earnings release. Short interest in Coca-Cola has decreased by 18.2% since the company's last earnings release, while the stock has drifted higher by 8.1% from its open following the earnings release, to be 12.6% above its 200-day moving average at $57.95. Let's jump into the charts now and take a look at the technical setup and what I'm watching for in terms of trading opportunities. I'm looking for any three-wave corrective move to retest these prior highs here at $62.90. I watch for bullish reversal patterns there to engage on the long side, initially looking for a test of 68.18, which is the equality objective versus this swing structure here. In terms of the pullback, we could even pull back into this high volume node and the trend channel support at $61. Even there, I'm still looking for bullish reversal patterns to engage on the long side. From a technical perspective, in terms of the weekly chart, we have tagged pretty much to the dollar there, the equality objective versus this swing structure. We also have the 127 extension of the pandemic meltdown. So from a technical perspective, we should be due a pause here at the $66. And like I say, looking for any pullbacks now into the $62 to $60 area. Watch for bullish reversal patterns there, gauge on the long side. And once we clear that 68 target, we're then looking for $70, $72.22 en route to an ideal $74.90, which is the 161 extension of the pandemic decline. We also have the yearly R3 coming in there at $74.40. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.